that note, let's bring in my colleague Ansh Bhilwar. He's here to recount similar instances in the past. Ansh, there have been downturns as far as the markets go in terms of corrections. Tell us historically how we've done in correction time.
Well, Nifty dipped below 200 DMA this week for the very first time in 18 months, but then it closed around the same level, so not a decisive breach. But let's see what happened in past when index has given a decisive breach below this 200 DMA. First is March 2023. A Nifty breached 200 DMA and fell by around 3.5%, but post that we saw that a strong recovery was backed by around 15% just in 4 months. Second is April 2022. Another breach saw Nifty drop by around 11%. However, it bounced back by around 18% merely in just 2 months. Third instance is Feb 2022, when we saw Nifty falling by around 7% below this 200 DMA, but then it led to swift recovery by more than 15% just in 1 month. Third is Feb 2022, the COVID crash. Now this is dramatic one because Nifty plunged by around 35%, but post that it gave a good recovery of more than 50% in just 5 months. Fifth instance is July 2019. Lastly, Nifty fell by around 4.5% below this critical moving average, reversing a strong 15% gain in just 3 months. So historical data shows that as though when Nifty gives a decisive breach below this 200 DMA, we see a small bit of a pain, but then after that, it sets the stage for a good major gains.
So that's the historical context. And Ansh, thanks very much for that. Now that the Nifty is trading near its 200-day moving average, it's looking heavily oversold. Where could the markets go? Is a recovery on the cards? And how quickly can it happen before this correction gets deeper or perhaps finds a base and builds on that? Let's get perspective from market veteran Sudip Bandyopadhyay. He's joining us, Group Chairman of Inditrade Capital. Mr. Bandyopadhyay, thanks for making the time and joining us on the show. You know, FIIs have been net sellers. They've slowed down the pace of withdrawals from Indian equities. And this is recent data. But while we've spoken about possible shifts, yes, in the Fed's monetary policy, also a global risk aversion and the ability of DIIs, very importantly, to keep inflows apace with FII outflows, that has been put to the test. Now, how's that equation looking to you?
Well, that equation didn't work during the last, let's say, from end September, FIIs started selling, and they have been selling relentlessly, and that equation hasn't worked. If you look at what's happening in India, I think, SIP inflows have increased to about 25,000 crore on a monthly basis. And our estimate is that beyond SIP, there is another 25,000 crore roughly coming to the market in one form or the other, whether it's an HNI, retail, insurance. So about 50,000 crore kind of incremental kitty is waiting to come to the market from domestic investors on a monthly basis. Whereas if you have looked at October, I think the FII outflow was more than 1 lakh crore. So obviously there is a mismatch, and that did result in the market crashing and correcting in a major way. Now, there are a lot of myths about this FII selling, and I would like to address some of them clearly. First point, which I think is important, is that it's not a India, sell India, buy China. I think that would be a very small fraction of the entire outflow. I think it's sell India, buy US, because I think US market is providing fantastic returns to the global investors, and with the Trump administration coming in January, I think the expectation of US domestic market improving even further is becoming stronger and stronger. The dollar strength, of course, is adding to all that. Now that is propelling FIIs to sell from all emerging markets, particularly where they have significant exposure like India, and take back money to US. And that's pretty much what is playing out at this stage. Now, how this can change? To my mind, there can be 2-3 things. One is, unfortunately, the corporate results for Q2 was not good. There are some hopes, and some of the companies, you talked about Hero MotoCorp. We did look at Eicher Motors earlier in the day. The results were nothing great, but the commentary, management forecast was great. Bharat Forge results was okay, but the management commentary was very strong. So there are a whole lot of Indian companies which are looking at a better Q3 and Q4. Now that can change their market thinking. The second is, the Trump administration will impose differential tariff for different countries. And the expectation is China will have a significantly higher tariff compared to India. Now, that will enthuse a whole lot of Indian companies because their US market positioning and scope for expanding US market will increase significantly.
Right.
So as and when that tariff gets announced, I believe that there will be some positive momentum coming back in Indian markets.
So,
of course,
yes,
dollar weakening will help as well.
So, Mr. Bandyopadhyay, when you talk about all of what is happening in the US markets, and it's not as much as by China as it is by US, how worried would you be if you consider Indian equities and the trajectory that they're on right now with the kind of sell-off that we've seen, especially with FIIs moving out? How worried are you about the spike in the dollar index and the yields on the 10-year American bonds? Is that a source of worry for any rebound in the markets?
Well, that's a source of worry, but I will also say that, if you are a long-term investor, you believe in the fundamentals of India, I don't think you should be unduly perturbed. Look, Indian market has kept on moving up, and they moved up to a certain level where the valuations definitely were looking extremely rich, and the margin of error was very, very thin. Now, when the corporate results started coming in and they were not as per the market expectations, the correction started. It got abated, aggravated and abated by FII selling. Now, if I'm a long-term investor and I believe in the Indian story and I believe that corporate results will start improving from the festival quarter, which is Q3, and again it will be followed up by Q4, where results should be good. I won't be too worried. Now, this correction was due. If you really ask me, it had to happen at some point of time. You can't have a market which keeps going up every day. So there was a correction which was warranted. Now, post-correction and this sharp correction, market today is looking a bit oversold. Now, this oversold nature of the market, when it increases, at some point of time, this will get arrested and some amount of recovery will come. Now, if that gets aided by some kind of tariff announcement in US, some kind of positive management commentary by Indian corporates, and things improving on ground. You have to also remember the dilemma which RBI is currently going through. While US is cutting interest rates, India has a challenge. They can't cut rate because inflation is zooming. Inflation is beyond RBI's tolerance limits. So we'll have to wait and watch for the inflation to come down a bit to enable RBI to start cutting interest rates, which will have a positive impact on Indian markets as well.
In that school of thought, Mr. Bandyopadhyay, that believes that the FIIs, when they return, will find the Nifty at the 30,000 odd level. So they'll live to regret their exit, because another section does believe that the Nifty has already lost 10% and is going to lose another 10. Are you sure about how placed the markets are for this recovery to take place? Is it going to happen in Q3, Q4? Now, that's the question, isn't it?
Well, I don't think FIIs will regret. Look, US market has produced the best possible return amongst the recognized global markets. If you compare any other market, even India, I think US has produced better returns. Now, what was happening in US market was a section of technology stocks were going up, whereas the other part of the market was languishing. Now, that has changed. A whole lot of US companies are moving up, and that is propelling US market returns. So I don't think FIIs will regret. And remember that they have made tons of money in India. They are selling, the market is falling, but they invested also a long time back, and they're making money. I think they're willing to take that bet that they will re-enter India at an appropriate time. And we have to accept one thing, that FIIs are investors. They are not looking at, they're not in love with India or anything like that. They want to invest for making money, and they are doing just that. So I don't think, we should worry too much about, whether they will regret or not.
All
the
right.
fact is, they're getting an opportunity in the US, they're investing there. Tomorrow they find the US interest rates are falling further, dollars weakening, they will come back to India.
Right. So corporate earnings and corporate performance is looking good in the US. How critical is earnings growth going to be in the market's recovery in our part of the world? And which sectors or companies you believe show the best potential in the upcoming quarters that will lead this kind of recovery when it happens?
Well, I believe two sectors, and one is probably contrary to the common opinion, FMCG. I think this is one beaten down sector. It was down significantly today also. And now, initially, there was a rural consumption challenge. Now there is urban consumption challenge. And that's the reason why FMCG has been beaten down. I strongly believe that Q3, which is the festival quarter, will show pickup in consumption, and it will be followed by Q4, which is generally a good quarter for Indian corporates. So FMCG earnings recovery, I believe, in spite of the common wisdom, is around the corner, and that should propel Indian FMCG to higher levels. Look, India is a country which is the most populous country. Some of the FMCG companies are efficient and are part of global conglomerates and globally benchmarked. So under the circumstances, I think that recovery is bound to happen sooner than later. So FMCG, definitely. The second segment where I'm positive is technology. I think, the Trump administration will provide significant opportunity of investment in the US. Now, most of our leading IT companies are well entrenched in the US market with strong presence in US. They will have some amount of visa challenges and all that, but I think they have over the years managed to handle that. So they will be in a fantastic position to get new business and incremental orders, which will propel their earnings to a different level altogether. Now, some of the mid-cap Indian IT companies are at a valuation which is a little stretched. So one needs to look at probably the large cap and pick and choose right companies in the IT to benefit from this upsurge in the coming months.
FMCG and IT, one of course is definitely a contra call, because looking at the way FMCG has gotten beaten down, but perhaps that's where the story lies. But in the kind of recovery we've seen after 2020, Mr. Bandyopadhyay, retail investors, they significantly added to market liquidity. How important is the retail investor sentiment right now in the recovery whenever that happens? And are there any signs of increased retail interest even within this current market volatility?
Well, I think it's extremely important, Vikram, because retail investors have become the backbone of Indian market. Initially, forget what is happening from end September till now, but before that, FIIs were selling, and in spite of FIIs selling, Indian market was going up, and that was on the back of continuous retail inflow in one form or the other, whether it's through the mutual fund route or direct or HNI, it was happening. Now, beyond a point, if the market does correct, I think retail will get scared, particularly the new bunch of investors, and they may start stopping their SIPs or start withdrawing from the market. That will be disastrous. But I don't think that's going to happen. I think we will start seeing some amount of recovery, correction to this trend very soon. Maybe it'll start next week itself. And the present lot of investors, particularly the new ones, haven't seen sharp market correction. A lot of them have come after COVID. So they haven't seen the sharp market correction. So, this correction probably is a lesson for them, and they're probably realizing that corrections do happen in the market. Now, if the recovery comes sooner than later, I think this will be a good lesson for them to learn, but they will not panic and they will continue to invest in Indian markets. If this fall continues unabated for some more time, I think we have to be worried about retail participation.
Typically, in corrections, it brings valuations down to more attractive levels, Mr. Bandyopadhyay, and that in itself entices long-term investors. Now, this post-correction periods that we've seen after 2008 and after 2013, investors returned because valuations became appealing. At what kind of valuation levels do you expect these investors to return? What is your word to them about playing out this period of volatility?
Well, I have been telling investors, and believe me, a lot of them are asking whether they should start investing or not, because the market is corrected by about 10%. What I've been advising them is keep watching the market. Don't immediately enter the market, but keep a watch on the market. As soon as you see the markets starting to turn around, start investing in good quality stocks, which you have always been wanting to buy. And even when you are starting to put money in the market, don't put all the liquidity you have at one shot. Wait and spread the investments over a few days or a few weeks. That's have been my advice. At this stage, I have been advising investors to wait and watch, because at some level, I believe that FII selling is not over yet.
Over at this point in time, but still these investors want to know, because like you said, they haven't been exposed to this kind of correction yet. We still have a cliffhanger like in the soaps. How deep do you expect this correction to be? That's what they'd like to know. Do you want to share some spoilers over here? Because I know investors would love such spoilers right now. How long and deep this correction could be?
Well, I think, we have corrected by about 10%. I won't be surprised if there is a further 5% correction. Now, I'm not saying that that correction will happen immediately. There may be some recovery and then some more correction. So it will be extremely volatile, but another 5% correction from the top is possible. That's my view. But look, there's nothing to panic. Let's give an example of let's say Mazagaon Dock. It's a fantastic company, doing very well. It had crossed 5,000. It has now corrected to around 3,900. Even if it corrects a little more, and if you're holding that stock, I would say continue holding. If you want to buy, I will say wait and watch. If it corrects a little more, then you start buying. That's the way I look at markets now.
Kind of stock picks that you'd suggest, are these momentum or value stocks that you're asking investors to look more favorably at?
Oh, I'm always asking them to look at value stocks. I think I believe in value stock investing. And that's the one strategy which I always advise investors.
Sure.
See, momentum is a very difficult thing to play. If you can play that, by all means, go ahead and do that. But I don't venture into that.
Mr. Bandyopadhyay, that one moving piece in our domestic market conditions are the assembly elections. They are taking place in the rather critical state of Maharashtra, both from policy perspective and general market sentiment as well. How do you see them moving the needle, as it were?
Well, I think one thing I've seen over the years, Vikram, I think market has learned to get excited, but after the results, after the election is over, to shrug and move on. And I believe pretty much the same thing will happen, whichever way the election turns out. They did that same thing for these central elections, parliament elections. They did the same thing for Haryana election, and I'm sure they will do the same thing for Maharashtra elections as well.
And one more question. Yes, go on.
Correction, some challenge, it will be for 1 or 2 days. That's about it.
Fair enough.
Beyond, we'll go back to analyzing the fundamentals, analyzing the global trends, analyzing FII selling, and what all we have been discussing all this while.
Yes. But do you think the positive energy is going to be concentrated in the primary markets? I mean, look at the Swiggy IPO. It listed at the premium of more than 5.5% in these volatile times. We're talking about 5.6 premium to that IPO price of 390 rupees. In the last decade, I mean, when have you seen a company with an issue size that's upwards of 10,000 crore rupees actually list above its offer price? It tells you something about the interest in IPOs right now, isn't it?
No, absolutely. And I think it's for the right reason. Look, Indian market, we kept on complaining about 1.5 months back that it's reaching a stage where it is overvalued. Now, how do you ensure that market is not overvalued when you have continuous liquidity inflow? The only way is to increase the depth of the market. And the depth of the market can increase only when you have more and more IPOs coming and absorbing the incremental liquidity. So good quality stocks should come more and more to the Indian market to ensure that the valuations remain viable for fresh investors to look at Indian market. Otherwise, the same number of stocks will be chased by significantly larger amount of money in the near future when inflows start. And that's not good for the health of the market. So I wholeheartedly welcome more and more IPOs of good quality companies to come and ensure that Indian market remains rightly valued.
For a correction in a bull market, and of course, though we may not be able to estimate correctly how long or deep this correction will be, but the India story remains, and that is the big takeaway for investors who are looking at the long term. Mr. Bandyopadhyay, it's always enlightening having a conversation with you, and we thank you again for joining us on this show on India Tonight here on ET Now.
If you like this video, then like, share and subscribe to ET Now.